Hello and welcome to Your Stocks on CNBC-TV18 in the Mumbai News Center. I'm Hormuz Fatakia. It's a very, very swift recovery that the market is witnessing right now. The Nifty is back in the green now and well above the mark of 22,100. Now almost 300 points off the lows of the day, which were around 21,850. Pull up the Bank Nifty as well, and that is also seeing a bit of a recovery from the lows of the day. And the contributors there that's leading the recovery there, HDFC Bank, ICICI Bank. So the banking heavyweights are leading the recovery, as is Asian Paints, and some contribution coming in from IT as well. The Nifty Bank there, you can see they're almost 350 points higher now, swiftly heading towards the mark of 48,000 as we speak. So good going there. The market recovering, a very swift recovery for the markets, and the banking heavyweights are leading the recovery there. Now what is not doing well though is Tata Motors, and we'll get to that in just a bit. But let's get to our first query of the day, and Madhvi is writing to us from Vizag, and she is holding 50 shares of Tata Motors at 289. And let's introduce our guests as well first. We have joining in on the show today, we have Kush Bohra and Astha Jain, Kush Bohra, sorry, and Astha Jain from Hem Securities. Lady and gentlemen, thank you so much for joining in. Start off with that query from Tata Motors there. Madhvi is holding 50 shares of Tata Motors at 289. She wants to know whether she can hold the stock for the short to medium term and a long term perspective as well. So Kush, for the short to medium term, she's almost very well in the money, almost 4.5x from her buy price. What's the call there on Tata Motors?
Hey, hi, Hormuz. Good to see you on the show here. Hi, Astha. Well, first up, I don't think there is a major structural damage when it comes to, the stock price. I know the stock seeing a big crack today on the back of good volumes, but from a purely technical standpoint, there are a couple of support zones that will kick in. 940 is one such level, and then, a little lower, perhaps 900 is going to act as a support zone. Since she's a long-term investor, my suggestion is to, wait up, not be in a hurry to sell. Even from a medium to short-term perspective, I think the stock could witness a rebound from these 940 to 910 levels if it were to get to 910. So wait for that dip. Perhaps this might even actually be an opportunity to add some more, at least from a medium to a long-term perspective.
Right. What about you, Astha? There are a lot of downgrades that came in for Tata Motors this morning post the results. The management commentary was very subdued as well. The JLR margins for FY25 are expected to be flat, as a result of which came the downgrades, and you're seeing the fall in the stock as well today. What's your call now for the long term? What should Madhvi do, since she has made plenty of profits in her investment anyway?
Hi, good afternoon to both of you. So talking about discounter, yes, the results were not up to the mark, but what we should look at the broader story, and the broader story is that, first of all, on the Jaguar Land Rovers, if I talk about that counter, basically management is quite optimistic to turn it into the net cash positive by end of FY25. So that is one major positive about this company. Secondly, if we talk about their guidance also, yes, their guidance is not that strong, but we are expecting some good launches in H2 of FY25. So on the basis of that, and then now this deleveraging plan which is going on in the company, it is taking very well, place in the company. So I think all these points are indicating to the long-term story. And in the short term, we might look some sort of weakness, but in the long term, the story is still intact. We are quite optimistic on this counter, recommending a hold, maybe not buy at the present level, because some more downside can be seen. So that will be the better opportunity to enter into the counter. But yes, hold from our side with a price target of 1,070 to 1,080 at the initial levels.
Hold at current levels there. Astha and Kush both hold that thought, because the numbers of UPL are flashing on your screen, and it's a surprise on the bottom line though. The company, the poll was anticipating a net loss. The company has delivered a profit there, a 40 crore net profit coming in compared to a loss of 356 crore as an estimate there, and that is also aided, mind you, by a one-time gain of 105 crores. So if you exclude that one-time gain, it's still a net loss, but the company on the bottom line though is still reflecting as a profit. The revenue though is well above estimates, revenue coming in at around 14,078 crores for UPL compared to the CNBC-TV18 poll of 11,720 crore. The main commentary though will be awaited on two fronts. One is the debt that the management had guided towards the end of the third quarter, that they are going to reduce their debt to $2.5 billion from 3.7 billion. So that will be on the radar once the investor presentation comes in, and also on the guidance that they would give for FY25. So the two things that need to be watched out for. One is the guidance for FY25 and the debt as well. Now, EBITDA also well above the pole there. 1932 crores is the EBITDA compared to the pole of 1213 crores. So overall, very good numbers from UPL. The one-time gain has contributed to the profit, but even though if it excluding the profit, it's still a loss, but the loss is also narrower than what was expected, and that is showing up in the stock price as well. 5.5% higher now on UPL, almost 530 as we speak. Those are numbers coming in from UPL. Astha, would you like to comment on the numbers? The first cut, though, looks pretty impressive from UPL. A one-time gain has contributed to the profit, but it's still a profit loss, though it's still narrower than what was anticipated.
Absolutely right. Because what happened, we were expecting the loss to be as high as around 380 crores. But this time what we are seeing the profit, although this profit is majorly driven by one-time gain. But even if I exclude this one-time gain also, then also the loss is not that as high which we were expecting. On the contrary, what we are also expecting the margins to be at around 10.3%. That is EBITDA margin, which I am expecting right now. So I really need to see, because the EBITDA is higher than our expectation. We were expecting the EBITDA of around 1200 to 1300 CR, but here the EBITDA is high. So we really need to see how the EBITDA is taking place, and definitely on the top line it is beat. So yes, if the losses are not that high as markets are expecting, definitely markets will give a thumbs up, and prima facie results are looking quite strong. We really need to see the fine prints, but yes, at the initial level, results are looking good to us. And if the numbers in depth are also as good as what we are expecting right now, then we are giving a hold rating to this counter, and our price target for the same is around 570 to 580.
And the management also had guided that at the end of the December quarter that the loss for FY24 would be anywhere between 1200 to 1400 crores, and considering this one-time gain that has contributed to the profit, the loss for FY24 is bang on at 1200 crores. So in line with what the management guided for, and the net debt number is flashing on your screen as well, $2.6 billion compared to $3.76 billion. So pretty much in line with what the management had guided for. They had said that the debt will be down to $2.5 billion. It's at 2.66 billion, and it compared to the 3.7 billion that we had during the December quarter as well. So another parameter where UPL has met the guidance that the management had given. The tax expenses also significantly lower, and that has contributed to the bottom line as well. The stock continues to grow from strength to strength, now 6.5% higher on UPL. So debt meeting the guidance, the loss, the bottom line figure has also met the guidance, and so good going there for UPL. 534 now, and we'll get to UPL. The management will be joining in just a bit, but until then, let's take another query, and that comes from Ajit, and he's writing to us from Pune. He's holding 50 shares of Bandhan Bank at 370 rupees. He wants to know whether to hold or to book his losses or switch to some other profitable counter. Now, Bandhan Bank is almost halved from the levels that he's purchased it. So, Kush, if you can go take a stab at this one, what do the charts of Bandhan Bank suggest? Should he book his losses and move on to some other options that are available on the street right now?
Well, Bandhan Bank has been on our exit list for some time now, and he's seen a bulk of the pain, with the down move here. My suggestion would be to perhaps bear a little bit of pain and hold with a stop loss of 170, because there are green shoots of the stock attempting a recovery. Whether that will be successful or not remains to be seen. Beyond the level of 210, we'll have some sort of a confirmation whether this recovery is sustainable. But I think the risk reward ratio from here on is extremely attractive, so to speak. So 170 is a positional stop. If that is broken, then the recent rebound or the recent jump will also be negated. So bear some more pain and hold with a stop loss of 170. On the upside, you may get an opportunity to exit at levels of 220 and perhaps 250 as well. All the way up until his buy price, that might take some time. So that's what my suggestion would be: hold with a stop loss of 170.
Hold with a stop loss of 170 there. So hold that thought, guys, because the investor presentation for UPL is also out, and the company has issued its guidance for FY25. It's expecting revenue growth of 4 to 8% for the current financial year, and an EBITDA growth of over 50%. So that is the guidance that UPL is issuing, and they are also saying that $300 to $400 million of operational free cash generation will be used for debt reduction. So guidance coming in there for UPL 3 to 4%. 4 to 8% revenue growth actually for FY25. The stock though is slightly off the highs of the day. It was up almost 6.5% at one point. It's cooled off slightly. It's now up just 5%, but still trading with significant gains. We get more details on the outlook going forward as well. So at least on the debt front and on the bottom line front, the company has met its estimates there. The revenue for FY24 was down 20%. EBITDA is almost halved as well. The debt, as the management had guided for, down to 2.5%. Now the stock is cooling off significantly from the highs of the day. Now it's almost down below 4% now. So that is the commentary coming in from UPL when it comes to the guidance. So we'll speak more about this to the management as well. But moving on to our next query, and Arun is writing to us from Chennai, and he wants to know he can consider L&T for a short-term investment. Now, Astha, L&T is not a stock that gives you sharp swings in a very short span of time, but considering the numbers that the company issued and the guidance as well and the resultant stock reaction, can he consider buying the dip that has come into L&T?
I think we should wait for some more time and let this dip be widened, and then one can make an entry in the counter. Although they have cut the guidance, and that is not liked by the street, and we have seen that streets are not liking such sort of cut down in the guidance, and as a result we have seen the stock falling. But what we are expecting that they will continue to show strong performance going ahead also. Right now we really need to see how their order book will poised to be in the coming future, because what we have seen is there are some supply chain issues also, and most of their contracts are the fixed price contract. So all these things we will need to see how the company will be showing in their coming quarterly results. Although in this results cut in the management guiding is taking a wider picture, and that's why we have seen a fall. Right now, no buying is recommended. Maybe buying is recommended at dips at around 3100 to 3200 levels, and then price target can be set at around 3400 to 3450, but not at the current level we are recommending buy on this counter.
Right. All right, Astha, there's one final query as well that's coming in from Umesh, and he's writing to us from New Delhi, and he's holding 350 shares of Adani Enterprises. He's bought those shares at 32.78, and he's a short-term investor, and he wants to know whether he can continue holding the stock. So, Kush, he's currently trading with a bit of losses on his positions. He bought those shares at around 3,300. Adani Enterprises is currently at 28.50 as we speak. Do you see the stock going towards those levels, towards his buy price anytime soon, post which then he can consider an exit, or should he continue to hold the stock and average it down as it moves lower?
So, Harman's not a big fan of averaging, so will not recommend that certainly. But from a technical standpoint, if you see, then the stock is flirting with the 200-day moving average, trying to protect it very dearly. But on the weekly front, there is an upward sloping trendline support that comes in close to 2750. So my suggestion is, hold this with a stop loss of 2750. If that is broken, then the pain could accelerate. But if that is held, then the stock could attempt a rebound. And if his holding capacity is let's say anywhere from 3 to 6 months, then he could very well see his buy price also coming in that time frame.
Right. Astha, what about you? Because Adani Enterprises is not a stock that is very widely tracked on the street. Now, considering this gentleman is holding his positions with a bit of losses, what is your long-term call on Adani Enterprises, considering it is the incubation company and then it gives out to a lot of subsidiaries and lists them, and therefore its business continues as well? What's your call on the stock, if any?
So only for long term, we are recommending hold on this counter, and the price target can be set at around 3,200. So if we have seen the numbers, the core infra business is really working well for the company, in which they have roads, in which they have ANIL, that is Adani New Industries Limited ecosystem, and roads, and in fact airport business is also gaining traction, because what we have seen that they have seen increase in their passenger.
All right, I guess we've lost the line there with Astha, but that's what she's recommending. The core here is that she's recommending a buy only for the long term. But Kush and Astha, thanks a lot for joining in and answering our queries from our viewers this afternoon. That was Kush and Astha joining in there, answering some of the viewer queries. Time for a short break, but don't go anywhere. The management of UPL joins in on the other side to discuss the quarter gone by, and stay tuned. We'll be right back on the other side.